So these are the top 6 suburbs in a greater Newcastle area to look out for in 2025.
Like we're in the 7th largest city in Australia, and you're buying family houses sub 1 mil. Now you're talking about doubling your money over a 10-year period compared to a poorer investment. I can guarantee Raymond Terrace will do another 130% in the next decade.
Watch it in 10 years and we'll see.
But when you compare historical growth with the stats that it currently has, you have to recognise that it's a shit market, plain and simple.
I've seen it transform literally over the last 40 years from an industrial town to what it is today. And I think there's even more growth over the next 40 years. You know, it's a really good place to live, really good place to buy.
We're going to break down Newcastle and select the top 6 suburbs to buy in.
And being from Newcastle, we know how to pronounce these suburbs, which we copped a lot of grief in the last episode for. Who would have thought we couldn't pronounce some suburbs in places we've never been to? But we'll get straight into it. We're going to go into each suburb first. I'll give you a bit of rundown on the ones we're going through, but stick around because we are going to break down why these suburbs as well. So not just the suburbs, but exactly why we're recommending these suburbs and you know, what's happened over the last 5, 10, 15 years. Yeah,
so straight up, if anyone just wants the top 6 suburbs and disappear, it's Adamstown Heights, Charlestown, Macquarie Hills, New Lambton Heights,
Merewether Heights,
and Eleebana.
Yep. So we'll get straight into Adamstown Heights. So Adamstown Heights is a very family-friendly location. Yep. It's about 8 Ks, according to ChatGPT, from the CBD. Really nice place. It has got some of those houses up there, got really nice views over your Adamstown, Katara sort of areas. The stats, what do we got there? Well,
in terms of Adamstown Heights, we've actually discussed it on an episode probably about 6 months ago for one of the top areas as well, but that was talking about, I think, New South Wales broadly.
Yep.
And the reason Adamstown Heights, not only from the metrics that we look at, but purely from that biggest cohort of buyers in the market, we're seeing a big transition of an older demographic in those older family Adamstown Heights properties, and people are buying these unrenovated products and turning them into really nice modern family homes. And that's where we're seeing that massive increase in value with not only the market growth solely, but putting some sweat equity into it as well and manufacturing some growth.
Yeah, we do see a lot of that. The average house there hasn't been renovated in sort of 40, 50 years.
Yeah, exactly. So, and we saw, you know, it's surprising to see, but Lee McAllister, a local real estate agent here, just got close to a $1.7 million sale for a family house in Adamstown Heights on the weekend. So
massive.
It's a big result for the market, but we'll get into some of the other markets and we'll just break down Charlestown, because I think Charlestown is a really, really good price point for a lot of people who are listening as well.
Yep. So the next one is, as you said, Charlestown. Charlestown is actually part of Lake Macquarie. So for anyone that wants to correct me later, that's fine. It is part of Lake Macquarie, but we'll claim it as Newcastle.
Yeah.
It is actually the largest suburb in Lake Macquarie, and it's about 10 kilometres from the CBD.
Yeah.
So a really good place. It has a large shopping centre there called Charlestown Square. I forget what it's actually called now.
Yeah, I don't know, Charlestown Square.
It's got a lot
of medical centres and all of that.
A very, very big focus recently on commercial investment in that area.
Yeah.
There's a brand new medical centre that's just been opened on the Pacific Highway there.
Yeah.
Huge. You know, I think there's a lot of commercial investment in that area, and it's for good reason.
And Charlestown's very similar in nature to that Adamstown Heights, where you've got proximity to the beach, you know, Dudley Beach, Redhead Beach, also proximity to Lake Macquarie is sitting right in between them. But you've also got a big workforce in that location. And, you know, I purchased a house for a client there recently, a 4-bedroom family house for $910,000.
Yeah.
Like we're in the 7th largest city in Australia, and you're buying family houses sub 1 mil.
Yeah, and it's 10K from the CBD.
Exactly.
And I would also consider Charlestown to be a mini CBD.
Yeah, exactly.
So
before we get into the other suburbs, we will break down Charlestown from the metrics that we actually look at. So from a growth perspective, Charlestown has done 93% over that long-term 10-year period. But the reason I've chosen Charlestown in this situation is because of the spillover potential from those more expensive neighbouring markets being the family houses in Adamstown Heights and Dudley and Cohiba. So I've got a potential for those more expensive neighbouring markets to push families into those lower priced suburbs, and Charlestown is really in a really good position for that. In terms of other metrics from the supply and demand side of things, stock on market, there's only 11 listings, so 0.24% stock on market. Inventory is 0.5%, so there's only half a month worth of supply in that market. Building approvals, the only way that new houses get approved in Charlestown is rezoning of land.
Yep.
So although there's more townhouses and units coming to Charlestown, there's actually less houses, making that market even more scarce. Hold periods from a supply perspective as well. Average hold periods for most markets are 9 years. Charlestown is being held for 11.3 years.
Just above.
So just above. Vacancy rates are slightly higher. They're sitting at 2%, but you can mitigate that sort of risk on the vacancy side with buying the right asset.
Yeah, there's a lot of apartments in Charlestown.
Which shoots up that vacancy rate.
Yeah. So, Charlestown's one of those areas where there is a lot of apartments, and I'd probably avoid them.
Yeah. And in terms of days on market, we're sitting at 30 days, which is the auction campaign cycle.
Yeah.
And, not surprising that most of them are going to auction because there's that competition in the market. In terms of the affordability, currently Charlestown's sitting at 40 years to own. The long-term average should be sitting around 45 years to own. So there's about 5 years from an affordability perspective to make up in that market. But we'll move on to the next suburb,
Macquarie Hills. So Macquarie Hills, again, in Lake Macquarie. It's between Cardiff and Warners Bay. Nice little area there. Very popular with young families. Few housing estates in there that have, they're probably a little bit older now, these housing estates. I think they're in about the 2000s.
Yeah,
they'll put through.
And look, just to touch on that with those housing estates, there's going to be bad purchases in all of these markets.
Yeah.
So, you can go and buy a rubbish unit in Charlestown, for example. It's going to do terribly.
Yeah.
If you're not buying the right asset in these markets, I wouldn't recommend buying in them. So, but Macquarie Hills, from that price point perspective, you've got a lot of people competing for that market because it's around that $900,000 point. You've got downsizers, investors, first home buyers, and families all competing for those 3 and 4 bedroom houses.
Yep. So there's average income I've got here as being around $19.30 per week. It's quite close. So there's planned infrastructure. They are still planning the transport hub at Glendale, which is going to drive that area as well. They've created the that road between Glendale and Cardiff now, which connects those two really well as well. So they are spending some money in that area, and I think that will reflect in the prices in the next 5-10 years.
Exactly. Next one, which is pretty close to Brad, Merewether Heights.
Very close. So that's literally where I've purchased. Merewether and Merewether Heights has always been known as like the affluent sort of suburb.
Yeah.
It's green, leafy. Merewether Heights, obviously up the top of Merewether, does have quite a good view. A lot of the homes there. I didn't get one with the view. But basically, it's a green, leafy suburb. There's next to no land. Like you can't buy land there. It's a knockdown rebuild if you are getting a building approval there.
It's very similar in nature to the Adamstown Heights market, but does come with the Merewether postcode. It's closer to town. It's closer to the beach. There's more affluence in that market. There's more money in that market. And it comes with a bit of status as well.
And they've had huge growth in that area.
135% over the past 10 years.
Yeah.
When you compare it to, like Newcastle in the city, obviously at 65%, you're talking about doubling your money over a 10-year period compared to a poorer investment.
The average purchase price, though, in that area is quite high. Mm-hmm. It's sort of around that 1.7 mark for a 4-bedder. Yeah. It does jump up quite a bit.
And that's the thing. We can sit here and do purely investment sub 800K. or sub 1 mil. These are just markets for, long-term growth for a specific property type. Yep. So the buyer for the Merewether Heights market are typically families.
Yep. The other things to sort of note there is the rental yield is quite low.
Yeah.
You're looking sort of around that between 2.5% to 3% on average.
Yeah.
But that's always going to happen in an area where the value is quite high.
Yeah.
Those affluent areas, they're good for your long-term capital growth.
Yeah.
You're not buying something like that for yield.
No, and the thing is, every market has their cap. Every market has a price point for both the rental market and the sales market. There's the reason that those vacancy rates sit slightly higher than I'd ideally like is because you'd typically see, say, a $2.5 million property in Merewether Heights go to market for $1,500 per week.
Yeah.
There's very few people in Newcastle who pay $1,500 per week. And so it shoots up the overall market average vacancy rates.
Yeah. Yeah. But as I said, the housing, like the investment versus owner-occupier in that area, it's majority.
Yeah.
Big majority is owner-occupied.
Yeah, which is one of the most important things from that scarcity perspective. You want to be buying in markets where there's more owners to renters.
Correct.
And there's only like 90%, there's not 90% owner-occupiers compared to investors in that market.
And we are going to compare these suburbs against a very popular Brisbane suburb at the end of the episode too.
Yeah.
So on to the next one, we have New Lambton Heights. So New Lambton Heights is very close to John Hunter Hospital.
Yep.
Arguably one of the best hospitals in Australia. Obviously, doctors and affluent area as well, because these doctors, they want to be close to work.
Yep.
A lot of them are on call 24/7.
Yep.
They got a little pager, it goes off. They don't want to be driving half an hour to get
Exactly.
there. So you can imagine the area. It's got the nice hedges and the green and very well manicured. It feels luxurious when you're driving through it. It really does.
Yeah.
So obviously that area is going to do really well, because you've got people with very high incomes competing for these blocks.
The biggest thing for me, and New Lambton Heights stacks up comparable to Charlestown from the metric sides of things, but the biggest thing for me with this New Lambton Heights market, it's neighbouring New Lambton, which I think the typical value for New Lambton sits at 1.8 mil. Typical value for New Lambton Heights sits around that 1.2. There's a massive gap between those two price points and their neighbouring suburbs. There's an even bigger difference in price points between 3-bedroom and 4-bedroom houses. So there's a slight arbitrage opportunity there where someone can buy a 3-bedroom house in that market at a fourth and you're getting a couple of $100K uplift by just doing a small bit of renovation.
Oh, for sure. And vacancy rates are very low there. The average income is quite high.
Yeah.
It's jumped quite a lot, even from Merewether. It's gone up to sort of closer to that 2.5, 2.6.
Well, yeah, and that's the thing. The thing about the average incomes, it's from census data from 2021.
Yeah.
So we've got 4 years to make up there. It's obviously significantly higher than that.
Yeah, it'd be closer to 3,000 a week, I'd say by now.
Yeah.
Infrastructure in that area, John Hunter Hospital is having a huge redevelopment at the moment, $835 million worth to be precise.
It'll blow out to a bill.
Yeah, it'll be $1 billion. You've also got the bypass that's going through there.
Yeah.
So the traffic in that area is going to just halve.
And that's the thing, a lot of people hate that Lambton Road.
It sucks.
Which is going to be completely bypassed and you're going to return back to purely residential.
Yep. So then all of a sudden it's more appealing again.
Yep.
So you've got a lot of the spending in that area. You've got the doctors. There's a lot of positives in New Lambton Heights, in my opinion.
From an owner-occupied perspective, I'd probably choose New Lambton Heights over Charlestown.
Yeah. Last one for this before we get onto the Brisbane suburb is Eleebana. So again, I've said Newcastle, but this is another Lake Macquarie. But
Lake Mac, very similar to all of them.
We bundle them up. So Eleebana's Lakeside, so it is further down towards, if everyone knows where Warners Bay is, it's sort of closer to there. It's great. It's got some parks. It's a really green, leafy suburb. Yeah. A lot of family appeal there for sure.
A lot of people with money moving from Newcastle out to the lake for sort of a slower lifestyle, you can say.
There's more value for money there too.
Exactly.
If I sold my house in Merewether for say, $2 mil, you're going to get something really nice out there for $2 mil.
Yeah.
I'm in the run
You'd have
down
water
for
views.
better,
Yeah. Yeah.
but I've bought the land.
Yeah, exactly.
You go out to somewhere like that, you're getting water views.
Yeah.
For $2 million,
Yeah.
you're getting something really nice.
Yeah. Sydney buyers coming up. Eleebana is going to be really influenced by, I talk about it all the time, the downsizing market. There's a lot of people, we've got an ageing population. There's a lot of downsizers selling big family homes. They're moving to areas where they've got grandkids or their kids are living from a lifestyle perspective. So there's going to be a lot of money move into these markets because of that reason.
It's got a high average income per household. It's got a really high owner-occupiers investor percentage as well. So there's not as many rentals in that area.
Yep.
Again, that's a really good thing to look at, which we're going to compare to
Mostly
Brisbane.
houses compared to units.
Yeah, exactly. So again, very similar to that Adamstown Heights area where there's big opportunities to buy the older houses, generate that equity and move on.
And before we compare it to this market in Brisbane, these are markets in Newcastle that we've picked out. It was very hard to narrow it down to these 6 markets because we're just going very broad. We're not talking to sub 800K investors. We're not talking to first home buyers. We're talking to the general market. There will be markets like the Junction. The Junction did 160%. It was the top performer over the past 10 years. The Junction will still continue to perform, but it's a typical price point of $2.5 million. And you're talking about big renovated $3.5 million family homes or 4-bedroom luxury townhouses or semi-detached properties, which downsizers buy. Typically, we're not talking to downsizers on this podcast.
No.
So if you do buy in the Junction, it's going to do really well as well. So
another area to really look out for is around the airport.
Yeah.
Because you've got a lot of investment. The international airport at Newcastle opens in a few weeks.
Yeah.
And then they're going to open up to 3 flights per week to Bali, which is big news for the area. You've also got it was announced a week or so ago, they're building a missile factory at next to the RAF base, which again brings skilled workers into the area.
Yeah.
They're not going to want to be too far from work.
So there's a lot of mixed opinions about Raymond Terrace.
Yeah.
Raymond Terrace is a lower socioeconomic. I do recognise that. However, you can still buy investments in Raymond Terrace for 600 to 650K. Great superannuation purchase. It did 130% growth over the past decade. Raymond Terrace is positioned. There's a multi-billion-dollar freeway extension, 32-kilometre freeway extension. Raymond Terrace will be the last stop to Sydney. It's the closest suburb to the international airport of Newcastle, the expansion. And then all of those things that you just mentioned with the RAF base.
Yeah.
I can guarantee Raymond Terrace will do another 130% in the next decade.
Watch it in 10 years and we'll see. So we'll get onto the Brisbane suburb that we're going to compare. So the reason we did this is obviously there's a lot of people pushing Brisbane at the moment, and for good reason a lot of the time. But one suburb we did pick out had quite an artificial spike from what we could see.
Yeah.
Whether that spike is manufactured by podcasts and buyers agents all pushing the certain area,
Cheap money.
we don't know. But if you look at long-term growth in any region or any suburb, if you see these artificial spikes, like you look at Perth as an example, it literally went backwards for 19 years and then spiked. Yeah. There's got to be a reason, and is that sustainable? And that's probably the biggest concern.
You can't solely rely on historical growth, but when you compare historical growth with the stats that it currently has, you have to recognise that it's a shit market, plain and simple. So Redbank Plains is a market that we're going to compare. Redbank Plains is in Queensland, and it's at a price point at 722K, typical price. So a lot of investors are buying there, obviously. From 2007 to 2020, Redbank Plains did nothing. It just, if you bought in 2007, sold in 20, you made no money.
It's a very big housing estate area.
Okay.
Lots of housing estates, and there's lots of room to move too. So it's going to be one of those areas where they do keep building out.
And that's the thing, recognise future development and future growth. But from 2020 to 2025, it's just done nothing but go up. It's done 100% growth over that 5-year period, which is pretty unsustainable growth in my opinion. If you look at it from the growth rate cycle perspective, it's essentially sat below negative the past 15 years, and then there's a massive spike in growth, and we can download this report and put it in the show notes as well. When you compare it from the higher level fundamentals of socioeconomics, when you compare New Lambton, for example, it ranks 10 out of 10 for socioeconomics, Redbank Plains ranks 1.
Yep.
So it's extremely low socioeconomic area.
There's more than 60% are investors.
60% of that market are investors.
Yeah.
So you compare that from a scarcity perspective. When you go and invest in Redbank Plains and you put your property on the market to rent, you're competing with 60% of the market of other rental properties. What makes your property better than any of the others on that market?
Usually nothing.
Nothing, which is where you get higher vacancy periods.
Yeah, or lower yields because you have to keep dropping it to get someone in there.
From the supply and demand side of things, it doesn't look too bad apart from the building approvals. 200 new building approvals. In my opinion, it's a terrible market to be buying in.
Yeah.
There's far superior markets to be buying than...
I think every single suburb we've listed today is a better suburb. Look, that sort of wraps it up for today.
Yeah.
Obviously, we're quite biased. We live in Newcastle. I was born literally and raised in Newcastle, so I've seen it transform literally over the last 40 years from an industrial town to what it is today. And I think there's even more growth over the next 40 years. You know, it's a really good place to live, really good place to buy, in my opinion. That's it for today.
See you in the next one.
Thank you.